Market Outlook, Week 41. The past week was less about data and more about expectations. In the US, a few early indicators appeared, but the real driver remained the rate channel. The curve exhaled, implied rate volatility ticked higher, and precisely this mix, less yield pressure, more uncertainty about the timing and depth of future cuts, supported risk assets. Europe delivered a mixed picture. While PMIs still point to a subdued industrial backdrop, parts of services show signs of stabilization. On FX, the dollar stayed within the Fed expectation range, and the euro reacted sensitively to consumption and price signals. In short, it was a classic narrative week. Fewer hard releases, more repricing via communication and forward guidance. In crypto, that regime carried through. Bitcoin remained at the metronome. BTC dominance hovered roughly between 56% and 57% over the week, signaling a preference for core beta liquidity. Market sentiment moved sharply higher. The fear and greed index climbed from about 33 last week to 71 now. In such conditions, even small surprises in communication or data can amplify intraday swings. Altcoins behaved selectively and event-driven. Breadth emerged above all, where liquidity, narrative, and technical structure aligned. Looking ahead, Week 41 centers on monetary policy tone. On Wednesday, the FOMC minutes from the September meeting arrive. The nuances are decisive: how the committee weighs growth, labor, and price risks, and how much tolerance it has for temporarily softer data. Dovish phrasing tends to pull yields lower and support risk assets. A firmer tone tends to lift volatility. On Thursday, the ECB's monetary policy accounts follow, useful for understanding internal balances on the Governing Council. On the data track, Euro area retail sales and German factory orders illuminate activity in Europe. In the US, initial jobless claims offer a high-frequency labor signal, and on Friday, the Michigan sentiment update completes the consumer side. The result is a week with few but potentially directional catalysts, interspersed with phases where narratives steer the tape. For crypto correlations, this implies the first impulse remains rate-driven and thus BTC-led, with ETH typically following in a second wave while altcoins continue to respond selectively. In technical terms, trend-following structures are more resilient in core pairs than in peripheral names. Mean reversion works best around release windows. The combination of elevated BTC dominance and F&G at 71 is both opportunity and risk. Momentum can carry further, yet failed breakouts become more likely if the minute's tone or the ECB accounts deviate from consensus. On performance, Quantum recorded a technical result of plus 0.8% in week 40. The gain came chiefly from disciplined ADA-USDC structures, consistent position sizing, and restraint in pairs with limited execution depth. This figure describes our internal research environment only and is not a promise of future outcomes. Operationally, we calibrate week 41 to the event windows. Around the FOMC minutes and ECB accounts, we reduce automation in the immediate release minute and prioritize confirmed post-event flows, break, retest, continuation. The emphasis remains on highly liquid pairs. Altcoin exposure stays selective and short cycle. In parallel, we continue developing our research signals for ADA and DOT with a focus on trigger fidelity under elevated BTC dominance and robust execution when volatility widens spreads. The aim is to guide models steadily through monetary catalysts without increasing drawdown during noise phases. This material constitutes research market commentary only. We do not provide buy-sell recommendations. Our analyses serve solely for internal model development and calibration. Quantum data analytics. Analytical, strategic, innovative.